Okay, looks like we're live again. Am I correct? Looks like we're live again. All right. Let me just quickly. Got it. Right. All right, cool. So I'm in full control. I do apologize, man. I do apologize for that. There we go. Right. Just waiting for. Okay, so I can hear myself back. Mic check on the YouTube there. Sorry, guys. Just give me a quick mic check. Can I get a quick mic check? Can I get a quick mic check? We are back. It's unfortunate. People might use the old link that didn't work out. You know, I feel terrible for that. But can I get a quick mic check? Then we can start. Just let me know. Let me know who's around, man. Let me know loud and clear. Fantastic. Thank you. Got the green light. Right, guys, I'm gonna go because we've kind of like lost 7 minutes. You know, and that's very unfortunate. But you know, on the other hand, you know, it was my fault for assuming that YouTube Live was easy like Zoom Live. I'll learn about the YouTube Live maybe sometime this week, and we'll do it again next week. But yeah, I'm back to my comfortable space, which is Zoom. Hope you guys are doing well. One more time, shake my hand. Good afternoon. This is our first war room of the year. It's our first war room of the year. I've done a couple of war rooms already on the channel. If you're not a 365 student, I'd encourage you to watch that. 365 students, I hope you're on top of these war rooms, because this year, every single war room I give will come up with a follow-up list of trades, and I'm taking all of them, and you should too. Right, so we can average out profitably by the end of the year, right? So this is me. I'm so data-driven, right? I love proving stuff. It took me almost 1,000 trades to create module 1 and module 2, which is pretty much the majority of our course. And I'm now very close to completing another 1,000 trades to complete module 3, which is intraday trading. And so now we've got this crazy spreadsheet idea that I came up with as well, which I know a couple of you guys are waiting for. I looked at it today and it's ready. It's ready, right? So this in front of you right now, as a quick introduction while people are settling in and trying to find the right link and all that kind of stuff. In front of you right now is literally where we are, all right? So you guys don't know about these 3 trades here because these are written as my private plan, okay? That's number 1. Number 2, there was War Room 48 that I did during the week a few days ago, right? War Room 48 that I did during the week, this past week, a few days ago. I am going tonight to add, not tonight, tomorrow. It's useless for me to plan pending orders when the markets are closed. So as soon as the markets open tomorrow, I'm going to input some of the trades that we planned for last week. I think it was on Tuesday or Wednesday, a few days ago. So you guys are going to have this entire setup here, right? I've already explained this in War Room number 45, right? So if you need help in understanding the spreadsheet, it's perfectly fine. You can ask me, but it's going to be only access provided for students, right? So every time we meet, guys, we're going to keep filling. These are trades we should be taking. And I saw Sia ask me a very good question. So at some point in time, I'll respond to that question. But basically, you can't control. So let me just explain it this way. You can't control which trade is going to belong to which cluster, because we don't know on the exact day these trades are going to get triggered. What we do know that is the ones that get triggered, I'll allocate them to cluster 1 because we're tracking cluster 1. Cluster 1 will only get full after 20 trades. We will know this because everything is also going to our trading journal. So the only things going to our trading journal, and you're going to see I've been a bit naughty with my trading journal. I have not filled it in this past week, right? But the only things, let's look at the 6,000 here. I haven't filled anything yet. But the only things that will be inside your trading journal are the trades that actually happened, right? The pending order list, we can have 1,000 pending orders till kingdom come. But we will know which ones were our first 20 because our first 20 will be inside the trading journal. I took this trade, I lost this month, I made this sum up. This is the exact date. All right. But our pending order list will have things to let us know. This belongs to cluster 1. This trade might get triggered only in cluster 4 if cluster 1, 2, and 3, and 4 are now filled up. All right. So it is a monumental way to allow for continuous, almost self-automated trading. Even though there are no bots, it's you and me. It's basically the core principle of set and forget. So that's what we're doing here. All right, but and then the other thing with the war rooms, guys, this is war room number 49. When I started the pre-recorded war rooms, I started with war room number 45, which means last year we did 44 war rooms. In a year, there are 52 weeks, right? So it's not, doesn't work out to 52 Sundays, but it can be about 50 to 52 Sundays. So I think I did a good job last year of showing up as many times as I could. And this year, I am committed to doing something very similar, catching up, but there'll be more war rooms this year because we're going to add one more layer during the week, right? And we'll see how that goes. And then we're going to also introduce Crypto Monday so that I don't rush over crypto assets during our war room time, right? So we'll have our normal war rooms on Mondays. I'll always do pre-recorded analysis on the crypto markets because I love you so much. Yes, Lincoln, you will have this document. I was filling up a couple of things. So if you notice, the last COT report dropped on Friday. So if you see here, I've got everything up to date now. When I say I mean it. So it's up to the 18th of January, which was last week, Tuesday. It's completely up to date. And I've tried to update as much as I can, 18 Jan. You see, so I need to just double check that everything is in and then I'll send it tonight. But everything is, no, send it tomorrow because I want to add the pending orders from War Room 48 and the pending orders we're going to create together today onto this document. So by tomorrow, 4 p.m., everyone will have access to this. It's a complete document. And then moving forward, I will keep updating it on our remote course on the live, right? So moving forward, that's what's going to be happening right there. All right, but our war rooms are pretty much organized this time around. I will have a list of pre-specific assets that I want to look into so that I don't have a 3-hour session and then I lose people along the way. You know, YouTube and analytics will tell you a lot of things. They'll tell you how long you keep your people's attention. Some people disappear and then they miss out on stuff. So I'm going to try and keep them succinct, as short as possible without robbing us of quality time as we go through the markets. But yeah, enough of this long introduction. I am excited to get busy. Right, so what I will do in the previous live link that I created, which had all my notes in there, which I'm going to have to recreate as I go, I'm going to be looking at a specific set of assets. Now, if I remember correctly, I'm in pillar 3 in my notes. So we're going to look at AUD USD, Euro AUD, EURCAD, Pound USD, USDCAD, crude oil, and Palladium. And then I think somebody asked me earlier on, I've forgotten who, but I think it was Alvin, to look at China 50. So I just added that as an extra asset, right? So that's about 2, 4, 6, about 8 assets. So it should take us an hour or so. All right, so crypto. I'll talk about this tomorrow. I will talk about a lot of crypto stuff tomorrow, but the short end of the stick is everyone in the entire world who is so short-term focused is surprised. We can't be surprised. I refuse that a single registered 365 student who did not register December, if you've been with me for at least 3 to 4 months, I refuse to believe that this is shocking that Bitcoin would drop. Last year, I kept telling you guys, smart money is making its move. Smart money is joining crypto. When we saw that futures announcement, they ain't going to be, no, look at the English. They're never going to be called smart money if they're going to arrive at Bitcoin at 65,000 and actually start buying coins at that level. Their job is to get the best deal on the table. So we anticipated this. What also we anticipated was during the run of the dollar last year, the Fed's FOMC continuous meetings last year, we anticipated that there was going to be tapering, and tapering would actually mean crypto would be a beautiful inflation hedge. That idea is not yet over. All right, don't get a short-term dip or a short-term crypto winter to mean that that game plan is over. Everything you're seeing now is what happens when you want to shoot an arrow. Before you let your arrow fly to hit a target, you need to pull it back for force. This is it. We need this to happen. But there are some of you who are only waking up to crypto right now, to finances right now, to trading property right now. This is a golden opportunity. This is your time machine. It is coming back. Now, I don't want to teach because it's a war room, and I promised my partner that I'm going to keep them short this year so I can also be part of Sunday dinner in my house. But I'm in my element. Let me tell you something as quickly as possible. I have something called a cash bag. A cash bag is a mental number inside the back of my head, and I watch it, I manage it. There is a certain amount of rands or dollars, whatever, that I want to leave in my account all the time. This is completely irrelevant to you if you're just starting out in trading, because if you're just starting out in trading, I'm going to assume you only got your $300 or your $100 and you want to grow. You want to grow, which is fine. But I'm saying some people, through other means of income, business, employment, etc., start generating a cash bag. A cash bag is amount that you have access to within 24 hours. You can leave it in your bank account to get the 3% interest, whatever. When people say buy the dip happens at the most incredibly painful times of your life. On the 13th of the month before payday, on the whatever it is when you don't have money. You need a savings culture so that you can take absolute advantage of this moment, right? Now, what's going to happen is Bitcoin is going to drop. It is dropping. At some point in time, it's going to find a bottom. We can talk about this tonight and a little bit more tomorrow of what that bottom is. As soon as Bitcoin finds a bottom, what that is going to do is it's going to create a signal to altcoins, alternative coins, and we're going to have another incredible, disgusting run of altcoin seasons. Altcoins are cheaper and they 10x, 100x, 1000x faster than you've ever seen. I'm talking about both the meme coins, also known as shit coins, but just your general basic coins. And what happens is a lot of people who have been in the market for a very long time, who know what they're doing, or who have a very good savings culture, use this bag, this secret pile of cash that you're holding to buy the dip, which means they wait for this to happen to catch the best price and buy it. You won't always be able to buy the dip if the dip happens when you don't have money. Of course, it's different if you're just a trader and you're waiting for XRP or Bitcoin or Ethereum to hit a demand and then you buy up again. That's perfectly fine. There's nothing wrong with that. But I find it more holistically beneficial to you that if you're a 365 student, you learn how to trade, but you also start to operate with an investor's mindset. So you want to trade these assets, but you also want to own these assets. You want to own these assets because this is your long-term play. This is passive, incredible income. Now, the whole point of this is if your portfolio, like mine, is taking a beating, my portfolio is taking an incredible beating. Last year, I moved more money into crypto, right? So I literally made it uneven. So it's now 60% crypto, 40% stocks. And right now, my portfolio is taking a phenomenal beating, And I like that. If you're in the World in 3 Years program, I've only sent you one financial note in October. And I said, if you never hear from me again, every month while you're waiting for a new financial note, all you need to do is to do something called dollar cost averaging. I'm not going to get into that right now because we're not here to teach. I just want to let you know, if you were to start buying Bitcoin as it falls, and that's what dollar cost averaging means. Buying it every week, every month. If calculate how much you wish you could put a week. If you want to put $100 a week, but you don't have that money, and then try and commit $400 every month. One day when Bitcoin finds its bottom, all of these are gains for you. All you have to do is be obedient to your vision and hold. All right, I'm literally talking about a 3-year hold could make a massive difference in your life. Right, so this is what's happening. Now, where's Bitcoin going? If you guys have been following me for a very long time, I've told you that there is a lot of room, an incredible amount of room for this asset to come down as low as 12,000 US dollars. It is so real and something I am praying for. My portfolio in the short term, 3-4 months, will look disgusting. I would probably lose my mind if I checked it every day. But what I will be doing in the long run is buying as it falls, buying as it falls. I'm not saying that's where it's going now, but I'm telling you that there's a lot of room for this to happen. Why? Because we're supply and demand traders, and we know that when it comes to the markets swing to the most part of the imbalance. Retail traders stay in ranges, support and resistance, MACD, all those city technical analysis keep you in the range, which force retail traders to always buy low and to always buy high and sell low within the range. Smart money moves in the outskirts where there's the most imbalance. And there is a lot of sell side to Bitcoin, you know, if you watch it carefully. You don't believe me? Let's look at the COT report for Bitcoin. I've been tracking the futures, so let me find it for you. I've got everything on this spreadsheet, man. I mean, this a senior trader said I could sell the spreadsheet. That guys like money too much, man. Well, I'm not selling this. This is not for sale. But it is only for students only. But my goodness gracious. Now let's have a look. Let's have a look at the events of last year, November, because while I'm doing this, you can quickly start to understand the power of this, of looking at order flows. You can really start to grapple with this idea. So we've got September, October, not a big deal. Let's start to look at the FOMC. Sometime in October, this thing was announced, right? That it was going to be a futures, blah, 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 and we could trade, and we saw a pump in the chart because that was good news for Bitcoin. It pushed Bitcoin to the incredible all-time high. I mean, we can get as specific as we want. Let's get very specific. Let's get the exact date when Bitcoin hit an all-time high. So I'll put that on the 8th of November. That's right. So on the 8th of November, we hit an all-time high, and that was behind that news that SEC had approved a futures contract, right? Which means SEC isn't really going to ban Bitcoin. They'll try and control it, they will regulate it, but to outright ban it is not going to happen if they are granting a futures contract, right? So that's the basic sentiment, right? So on the 8th of November, Bitcoin somewhere here on this line, see there, 9th of November, hit an all-time high. It was in Traders War Room number 45, where I taught you guys where I get all this information. So just go through our channel, look for 45/2022, and you'll learn about the spreadsheet. But here it is there, all-time high. Now, all-time high is amazing for portfolio holders. Some people made the mistake of buying at 65,000 because everyone kept saying it's going to 100,000, and it is. Right, you just never know when. It's like Jesus, you know he's coming, but you just don't know when. So you stay prepared. Now, what happened is when Bitcoin was climbing towards that all-time high, this column here stands for long. Longs means buy, short means sell. We can see what the institutions themselves were doing because we like to know what the big guys are doing. They were reducing their longs and increasing their shorts. When Bitcoin was an all-time high, when retail traders were pumping, buying, holding, and throwing parties that we've gotten back to 65,000, smart money was increasing the sell pressure. Now, if you watch War Room number 45, I told you that I've created for you what I call a sentiment indicator. A sentiment indicator is someone who's worked on the floor. I've worked on a trading floor and looked at floor orders with my own eyes. That's why I love this style of trading. I understand how accurate it can be. A sentiment indicator, as far as I've designed it, I just want to know at the end of the day, all the positions on the table from banks, commercials, hedge funds, institutions like us. This is us, 365 people, non-commercial positions. We are market speculators. We speculate, and that's how we make our money. Versus commercial positions who are hedging either because they own the asset or from a cash position perspective. I like to know at the end of the day, all the orders, the net position of non-commercials and the net position of commercials put together, who's winning? Are there more buy orders or are there more sell orders? Your sentiment indicator, where's the 9th now? 9th, there we go. Your sentiment indicator, when Bitcoin was at an all-time high, will also tell you there were more sell orders, the most since September. To be honest with you, in November, the most sell orders that ever existed on that particular asset sell on the sell side. So no matter how much we pray, guys, no matter how much we engage in the 21-day fast, when it comes to crypto and Forex and stocks, money wins. So your job is to understand how smart money is operating, because price will move where things are most imbalanced. There is more sell orders than buy orders. It's going to fall. But this is in line with smart money. Smart money hasn't even met the 50% benchmark to buy this thing. They are creating an even kill balance. So when you see COT reports looking like this, right, and it's like very close, 49.51, 47.53, it means they're creating a range for retail traders. In this range, retail traders are going to spend the whole day finding support and resistance, and they're going to get knocked out, because at the end of the day, money is tilting to one side. You can see even now till the 18th of January, we are still falling, right? So now, in terms of the charts, pure supply and demand, I trust nothing. I mean, if you remember on the daily time frame, I wanted to buy in a couple of places. One of my buys did extremely well. The second one, and then I broke even. So I didn't keep those profits because I broke even thinking it was gonna, fly up, zeroed me out. And then the second buy I took, I think hit my stop loss. So I stopped trying to buy this thing a long time ago. But I am pretty sure one of the buys that we're looking at was somewhere here. That demand has been taken out. I definitely believe this was buy 2. This demand has been taken out. It has now become so evident that this thing wants to fall. All right. And I would suggest you don't use your own personal money to try and catch something that institutions are trying to drop. The real question is, where will the drop be? Now, I know a lot of traders yesterday we did like a quick hoo-ha as senior traders, a lot of them are hoping for something to happen on the 30,000 mark, right? And I'm using very clear words here. It's just a hope. They're hoping because they don't want to see their portfolios tank, right? And I never understand that. But on the weekly time frame, if I have taught you, you will realize that we are about to see Bitcoin pump up a little bit again. We are about to see hope in the crypto markets, right? Look out for that. Look out for Bitcoin starting to pump up in the next few days or so, and people are going to assume that the drop is over. Now, if we understand supply and demand to be fair and true, and this happens, I will be here in a trading account, right? Like very carefully, with proper MTA, so not from the weekly, somewhere maybe on the H4, looking for sell positions as a trader, because I am almost convinced that if Bitcoin comes here and weakens this area one more time, this sure drop, crypto winter, is bound to continue for another 30 days or so. If it doesn't happen that way, we still win. Our portfolios start to recover. We're going back up. But I am more bearish than I am bullish for now, right? And the first big stop, if this happens, someone was trying to teach me about some indicator called the death cross, and I honestly mentally just shut down. But apparently there's something called the death cross. I don't want to pretend to know about it. I don't use any indicators when I trade, right? So the first drop would be somewhere here at the 20,000 mark, which we spoke about a lot last year, right? This is the first real type of significant collaboration of mankind. They're going to try and hold price there. When we get there, we're going to have to weigh whether smart money wants to continue pushing it down or not. I am praying really hard to get to 12,000 US dollars. If I get to 12,000 US dollars, I'm buying about 3 more Bitcoin coins fully, and then I'm opening a couple of positional trades here as well. Please note, I'm telling you right now, if we ever get to 12,000, that is a beautiful miracle. 12,200, I would love to buy this thing there. But there is a bus stop here around 20,000. We just need to see what happens here. So one more week, one more weekly candle. Let me do this. Let's see what the weekly looks like. Yeah, exactly. So maybe in 2 more weeks, we'll have clarity, right? So the next weekly candle could push up just to come back down. But if price breaches this area, this very weak area here, and then the next place for Bitcoin is 20,000, and it's a good place to take short-term buys. I promise you there will be a retail army there. There will be a massive retail army trying to force the laws of nature, and then that will delay the 12,000 US dollar drop. But 20,000 is also a good deal. Just think about it. If you're smart money and you entered the markets with Bitcoin moving around the price of say 65,000 and it's now at 20,000 US dollars, that is a massive discount. That's almost 80% off. Right, so as smart money, you might be compelled to take that deal if you're going against crypto whales, retail traders, all really trying to defend it there. All right, I hope they don't. I hope human beings see the bigger picture. Right, there's not a lot of crypto left to mine. There's not a lot of Bitcoin left to mine. So it'd be nice if we can get this thing nicely at 12,000 before we go all the way up. Right, but from a technical perspective, that's Bitcoin. All right. Shake my hand. Sorry I spoke so fast. I just wanted to get through this emotional damage panic. And I did do a video, by the way, at the beginning of January about Bitcoin, about how people, the US yields, treasury yields are bouncing back. So that's a safe haven status. So a lot of millionaires, billionaires would remove money from their crypto coins and put them back in those treasuries. That's a guaranteed, gain while this slump falls. All right, but we shall see. We shall see. Right, guys, so I'm going to slow down now and get into today's business. AUDUSD is our first asset. What's nice about the spreadsheet, by the way, the added benefit to it is what I do today in the war rooms. Tomorrow, Monday, I redo by myself quietly, without the pressure of being on live, without the pressure of saying the right thing on YouTube and all that kind of stuff. And you get my final thoughts on the spreadsheet. So my final exact entry points after much deliberation, because sometimes I'll like a trade set up on the daily and then later on by myself realize, man, what was I thinking? There's no confluence with the weekly. All right, and that's why I lost that EURUSD trade I took earlier on this year. Right, there wasn't confluence. It was a good setup on that 1 hour time frame, which is perfect. It made so much sense. I had absolutely convinced myself it was a guaranteed trade. And when I took a step back, man, it was a clear sucker. I was a sucker for that trade. And so what's nice about having that Monday quiet time is I get to replay all of this, pressure free. Right, so we've got AUDUSD open here, and you can see we've had the setup, playing out, this moving on the 13th of January. And some of these trades you'll see as the war rooms go on, there might not be anything to do because we already predicted the asset accurately. Right, so I've come to Saxo here because I know I left some notes for AUDUSD. I did not think it would be a good idea to just jump on this particular situation here. But more importantly, let me open AUDUSD on a completely different broker, Oanda, and let me just do a top-down analysis real quick so that you understand my thought process. All right, so as usual, as a quick recap, we start with the governing time frame because the governing time frame governs the entire assets movement. Number one, we also like to learn about the profile of the asset. If you want to know more, when I'm done with this live, I'll redo a new description and I'll put a link of the academy. The only discount, by the way, ends at the end of this month. After that, there are no discounts for the rest of the year because we did that all of last year. It made no big difference. So we'll be, this year we're not exchanging time for money. We are respecting every single law of wealth building, right? So there's this little situation here, and I don't think, in the right frame of mind, I particularly like how this trend line looks. But then again, this feels more natural to me. This feels so much more better, right? And you can see how price is playing up, right? We've got AUDUSD here, right? AUD is a risk sensitive asset. I remember teaching on this a couple of times. It falls under the likes of euro, pound, etc., etc. And so there's a direct correlation to the strength of the dollar and the strength of risk-sensitive assets, and market sentiment. Sentiment dictates the strength of an asset, right? So maybe before we go too far, we want to understand that I see that price is trying to leave this area and buy up there, and I believe it won't succeed. I believe that all risk-sensitive assets in general will follow the direction taken by EURUSD. And I've spoken about this many times, all right? So maybe that chart is not clear. It's for all my notes. Let me go to Saxo so you can see it for yourself, right? So I believe this will happen to most of these charts, right? So you'll see a trend line somewhere, you'll see a break of market structure, you know, you'll do whatever it is that you need to do according to your technical analysis, teachings, and all that kind of stuff. But at the end of the day, there is a need for price to actually arrive at a governing demand. So you'll see AUD USD right now is this here on EURUSD. This is AUD USD on Euro. I'll show it to you right now. Where I'm going to put the rectangle, this is what you're looking at on AUD USD. Got a bullish engulfing pattern. Price goes up, price comes back to it. Price is trying to leave again. Price will eventually break through. That's what you have right now. Just this area of value there on AUD USD. I'll show it to you. Comment, guys. Please use the chat. If I'm going too fast, talk to me. I'm excited. That's why I'm going a bit fast. I'm excited. Right, so there it is. You see this area that I was talking to you about? Bullish engulfing pattern. Prices arrived. Price is now trying to leave. Right, and pound USD did the same thing. It's a risk-sensitive asset. I'm just showing you that you need to know your assets over time. Let's find pound USD on a different chart with less notes on it. Right. So there it is. There's pound AUD USD. Break of market structure, price came in, retouch, test, prices bouncing back, and we know EURUSD took this long route and then eventually came back down. This one is very close to the governing demand, right? So that's why we're not yet entirely sure what's going to happen, right? But AUD USD is doing nothing out of its character. It is simply behaving as it should. It's a risk-sensitive asset, and so it's currently just playing according to that drum. Where is the broker I was using? Right, there we go. Right, so for me, for now, I'm seeing this, and I understand it to be quite a weak area for smart money to kind of like start buying from. You know, just to complicate life, I'm also seeing a bearish engulfing pattern right there, right on top of a demand. Okay, it's quite aggressive. Right, because remember, a strong area of value is one that takes out an opposing area of value, and the supply is trying to set itself up as an area of value to take out AUD USD. Because this year we've added the COT spreadsheet, we must keep referring to it so that it's second nature to you, so that you understand it, right? So now if I look at the holistic data for today's war room, it won't help because of time, but you can see AUD is always the first asset, right? Always the first asset. And you can see for most of the time, a lot of the positions end up being green in terms of the sentiment indicator. For us, however, as 365 traders, smart money as banks, we have been pushing south. That's 91% sell orders versus 8.5% buys. The previous week, 89%, and you can see it better here. So this is all the data for AUD. Now, remember I told you how my spreadsheet works. We want to operate at this level. We want to wait for a strong or long bias or a very strong or a very short bias. We want these orders to be so imbalanced from the 70s. You don't want to make a move on something that's sitting at 50. Dr. Francis, good to see you. Lincoln, Mrs. Mtunzi, Damlin from Botswana, Alan, by the way, shake my hand. I don't know who else is watching on the live, but for those of you who've commented, I appreciate all of you. Good to see you guys. Hope you guys are ready for class. We're going back to class in February, trading psychology. Module 3 will automatically run in the war room, but trading psychology, and it's not what we're doing in the podcast. The podcast is lifestyle, right? Trading psychology will strictly be around trading. I guarantee you, everyone will want to kind of like be a part of that. No one is teaching trading psychology properly, or at all, to be honest. Right, so here's the thing here about AUD. I mean, So the spreadsheet by design starts on the 7th of September last year, so that you can feel a full financial quarter, like rolling in. So September, October, November, December, January, etc. It goes on and on. I could have gone, further back, but then it would have taken me like a month to finish. But you can see since September, right, that there's been a strong, unwavering bias to sell AUDUSD, but the bias is actually gaining incredible momentum since the last 2 weeks of December into January, right? So it's looking like these guys are starting to compile a lot of sell orders. So this might change soon enough, right? So the sentiment indicator is not what we trade, it's what we like to see and know is going on when we are understanding retracements. We are non-commercial people. We speculate and we trade alongside the banks. There is a strong bias to sell positions. So when you see this, you don't just rush to open a sell. Supply and demand is still the principal thing that we are doing. So we need to make sure it makes sense with our order blocks and order flows in the chart. So on my governing time frame, I've got price trying to leave a demand and price already making contact with the supply. It's a confusing situation. So let's do a drop down. You see why I want to focus on just a few assets in these war rooms, because one asset takes forever, right? So looking at this thing carefully now on the weekly time frame, I'm going to delete these governing time frames and just start to make adjustments on the weekly. So I have a situation like this here, and I don't want to be fooled, right? I don't want to be fooled and pretend like there isn't a double demand here, right? There's a strong buying pressure here. Just in case this area breaks, there's a catchment system. Now, which one is more valuable? It's the first one, right? If price breaks through here and goes back under this trend line, this won't matter too much. There'll be a retracement, but nothing else, right? Why? I'm using the averaging candlesticks, Sakini Hashi candlesticks that show me order volume, right? So for the most part, this is just a clean run of imbalance. For the most part, it's just a clean run of imbalance, which means AUD has two choices: hold the line here and send price back to heaven, or create a doorway to hell and price drops. There's nothing more, nothing less in AUDUSD on the weekly time frame. So that's my mayoral time frame. On my mayoral time frame, it's important to then start to qualify the fact that we've got a supply up there as well. We've got a supply, we've got a clean imbalance, which is to say the sentiment indicator makes sense now, right? Because I can see why my sentiment indicator would still have a few more green left over orders. Smart money can't change its position size in a day. They're not intraday traders. These guys are positional traders. They build on their orders week after week. By the time 3 months have gone, it's a massive big buy order, a massive sell order. And for price to pivot, for you to see what's called a market reversal, smart money needs to start removing those orders bit by bit, as time goes by as well. So it's very, 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 very important to understand this. So my sentiment indicator still has a couple of orders to the upside, but I can see that my banks are starting to build sell positions very aggressively. So when I turn around now to the chart, I'm wondering if it might not be more prudent to wait for a sell than to take a buy. And when I'm looking at this particular chart here, I see a fresh area of value, a fresh weekly supply. Well, it's not really fresh, right? It's a reaction to this, right? So price came here, price reacted to this, and then created this, right? So this is actually quite strong, right? And then number two, I'm looking at my market structure. When I look at AUDUSD from a market structure perspective, I get the sense that price made a very beautiful higher high here, but since then has struggled to maintain it. So it's been making lower highs, right? As price makes lower highs, we're looking at where it will break out of structure. So now the next leg on this chart is very important, because we have a violation here where markets closed higher than the previous high, which would assume that this bearish structure is finished. That's one way to think about it. But now we need confirmation of that, because if markets continue up but close lower than this high, and the next leg closes lower than this low, then we've got the continuation to the downside, lower lows, lower highs. I hope that makes sense. I hope that comes across quite clear. But for me personally, anyways, as a signal service provider taking the trades myself, I am very interested in seeing what's going to happen there. I'm very much interested in seeing how markets are going to play there. So I'm not going to be looking for any sales that are too easy to figure out or too close to this demand. I'm going to wait for price to successfully move away, and then I'm going to try and sell up here. Now, if you want to be a cowboy trader, then you're looking for buys right now. I am not looking for buys. I want to be very clear about this. I'm on the daily time frame now, trying to find a good entry. I like entering on the daily as a swing trader. It means I don't have to compete with my mental state, managing trades, right? So if I switch to a Kine-Hashi candles, I like it because I get to see what's really is at play here. So let's say there's a supply that's active there, for argument's sake. Well, we have to investigate the supply. Now, if you've done the course, you'll know that there are different types of supplies and demands, right? So if I go back here to normal candlesticks, we can see that these are complicated 365 candles that create a strong supply. We can see they've been tagged a couple of times, markets trying to come as close as they can, a whole lot of market competition has been set forth in this particular area. We know that complicated 365 candles, or rather this type of an order block, is sensitive. It's got glass effect. So we know it's bound to break. It's dangerous to sell again in such an area of value. We also know that smart money loves to sell high and buy low. By definition of selling high and buying low, I'm keeping a close eye on this particular supply. The same one I showed you in the weekly time frame is just now been narrowed down and far much more neater on the daily for risk management, right? So one more time, I can hash on the daily, and I start to see a peak supply, a massive turning point where price not only broke this supply, because remember we were confused about this supply. We're like, but price made a lower high here, but then went up. Well, that's because there were better, higher supplies up there, which have been left intact by price. So this makes sense to me because markets will always sell at the highest supply possible. Sorry, I'm trying to dodge the sun. In this new house, the room that we chose to be my office is beautiful until the sun is sitting on the other side, right? There we go, that's a bit better. Right, so you can see this has been tagged a couple of times. So now my thing is, why this ceiling here? Why this sell stop? All the sell orders hiding here, right? There has to be some liquidity drop, right? So there's a reason why at that particular time price was not permitted to go up there. We will only know if there are enough sell orders when we get there ourselves. But as far as I can tell, I have no interest in selling here. I have a lot of interest in selling there. So this for me is a good place to sell AUDUSD. My target, because of this, and I'm really taking forever on one asset. Is it because it's my first time this year where I'm just teaching? People are just getting a free course, man. Let's tighten this area of value here on the daily. I just want to see the glass effect, right? So you see that that for me as a 365 trader tells me that there's not much buy support left in here. Price is gradually moving up, as we know of the sentiment indicator is telling us that there are more orders on the table for the buy side, but I suspect this won't last, which means as a swing trader committed to long-term plays and getting the most out of my pockets, number one, I could target here. Get a 1:4, almost 1:5, and just get out of there, get out of the drama. Like take the sell, exit there, which is perfect, right? Or I could then wait to see where the next bus stop will be for price, which really for me is the real money maker, right? You could also have two accounts or two positions, as long as you're doing a very good job of your lot sizes, where one, you take profit right there, and then the other one you hold. You hold until we get to 1:13, which is all the way down there. EURUSD is still weak. EURUSD still has to get to that governing supply. A lot of these risky assets are still on the move from last year's patterns, right? So this is not shocking. But yeah, AUDUSD, I've told you where I'm going to sell. Tomorrow on the actual spreadsheet, you should then have, a similar thing. So this is my pre-planned charts. You can see I've said the exact same similar thing that I planned out earlier on to you. I'm not selling here. I'm going to sell up there. All right. So I hope that's clear. I hope that's clear. I'll be moving on. If you're still with me on the live and you've learned something useful, or you are encouraged to stay a little bit longer, please don't forget to like the video. Let's let YouTube know why is it, and this thing is saved as Leroy Zoom meeting. I'm gonna have to change the name of this video, but yeah, let's let YouTube know we're back. Let's let the algorithm do its work and spread the truth, financial markets truth. Right, so EURUSD, EURUSD. There's not much to do. I've already marked this up on the spreadsheet, by the way. It's one of my private trades that I marked up. So somewhere in there on my pending order lists, you guys should have it, or will have it. If you come to pending order list, you'll see I've already planned for this EURUSD sell. Everything is done. It's a done deal. And that's because I saw this during the week, I guess. And I'm waiting for a sell. I'm waiting for this little cluster to happen until price gets there. But just to quickly do a quick brief walkthrough, this is EURUSD on the governing time frame. Right, beautiful chart. This made me my most money last year. So in terms of assets, when you put things properly on your trading journal, you can actually then have a review. You can really know yourself after 2 quarters, 2 financial quarters, about 6 months of trading. You will know which one's your strengths. So I learned 2021 that pound JPY and I need a break from each other. It's been taunting me that big sale that never actually happened. Price would give me a little bit of profits, and price would also stop me out. All right, so for the most part, EURUSD was my biggest money maker last year. AUDJPY was a classic, a couple of indices, NASDAQ, obviously naturally a classic. But my point is, start to create this data about yourself so you know who you are as a trader. But yeah, price is still weak. It's not the best. All right, we've sold many times. It is not the best. This is where price is right now. This to me looks like a PCP continuation pattern on a governing time frame, which means price could drastically change within the next 7 days, right? If it goes up, then this candlestick will turn green within 7 days, right? So then the monthly candlestick will be green, which is slightly in line. We don't have confluence with what I want to see, but on the mayoral time frame, there is a convincing case. There is a convincing case to put a stop to price, going a little bit up. So what I then did was, from this perspective, I found confluence for an entry on the daily. You will note that the demand that put price from 2020, has been weakened for the most part, right? And so we anticipate that the next time we come down here, we should not have too many problems. That's my anticipation. We anticipate that there will be not much. There's a complicated 365 candle. The imbalance has been balanced out. Prices leaving the area in a very choppy, weak manner, which also indicates that there isn't a lot of strong buyers, right? On the daily chart, we like to see good distribution as price moves towards an area of value. So the ups downs are very good, very healthy. And on the daily time frame, I'm waiting for something like this. Now, I am not one of those traders who's thoroughly obsessed with perfection. And you get traders like that. And I like that, right? I like that. You'll get a trader who finds you the exact order block on the 15-minute chart or the 5-minute chart to increase your risk to reward. And that's great. Problem with that is a lot of those traders, and it's from a standpoint of statistics and data, because I've done that before for like a year in my life. You get profitable, but you also have something like a 60% losing trades, 40% winning trades. So you have more losing trades, but your wins will be profitable and make you the most money because of your R&R. And that's okay. It's not good for me to trade like that from a business perspective, because remember, I'm also running an actual trading company. So when I sit in front of my corporate clients, they want to know my win rate. They understand that my risk to reward ratio is immaculate and it covers all my losses. But for conversation purposes, they also want to know that I do take the time to lose less and win more, and not lose more and when I win less still make more. And that's kind of like just a difference in caliber or in what people are doing. I just require to maintain the standard, a high win rate, and a perfect R&R type of thing. So for me, daily for these swings is very, very, very important. I don't want to get stopped out because I'm lost in smaller time frames and all that kind of stuff, right? So on the daily time frame, for the perfect traders, you could literally narrow this down to something like this, right? I don't see anything wrong with that. I see that holding. And I see it potentially working out for you. Let me just see. Yeah. The problem is, like I said, when I teach this stuff in module 1, you always want to look left and see the highest leg. And there was another supply somewhere in there, right? So you had a drop, base, drop, right? A continuous drop, base, drop. And that's typical, you know, textbook supply movement, drop, base, drop. And I want to make sure that my stop loss covers any type of unimaginable higher supply on a 5-minute chart, on a 15-minute chart that price may want to revisit. But for the trade to be worth it to me, 2 things need to happen. Number 1, I better be right. Number 2, I have to wait until I get a risk to reward ratio of at least 1:3. And what I like about this is, given the way the distribution is taking place here, by the time price gets to my supply, let me just show you a made up prediction. By the time, let's say, price bounces here again and then comes there, by the time price gets to my supply, it will be the closest, shortest distance to breaking this trend. All right, it'll be the very close to breaking this trend, which means then something like this can happen in my favor, and that's what I am hoping for and what I'm planning towards. So EURUSD, I'd love to re-enter this market with the daily supply sell somewhere here. And the finer tuned details, H4, H1 dailies, entry points, blah, 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 you'll get them in the spreadsheet, right? So that's EURUSD, done. I skipped Swiss franc JPY. Right, so I gave this trade out. I spoke about it in another video in my trading signal service inside the remote course. It was phase 1, post this on the 20th of October. There's no time for me to do social proof. You guys have seen me do this many times. I did link it up. Students would have this anyways with them. And that's the only people I need to impress in this lifetime. So you guys know we took a buy here. I explained to you in my last video why I had to take profits there, right? Because yeah, price was just getting aggressively on the downside. I am not in any position right now. I'm waiting to buy down there. There's nothing I want to do anymore here. I don't want to buy a retest here. I don't trust it. I honestly don't. It doesn't look like damage was done. It is a bullish engulfing pattern for an order block, but I just would prefer to get a perfect low buy, break of market structure, fresh area of value, which offers a 1:7 risk to reward. So if you've got a small account, you want to be very picky about the trades you take, because you could take 10 trades, 7 of them destroy your capital, and then the 3 that were perfectly fine in line with all our rules meet you at your lowest point, so you don't actually get the maximum value of these trades, right? But for those of you who want to see a top-down analysis of Swiss franc JPY, it will look something like this. Right, so we spoke about this. This is my favorite chart to do when we're looking at supply and demand curve for module 2. So I teach module 1, module 2, module 3, module 4 jumping out this year. But for the most part, this was a very good basic chart to use for supply and demand curve, right? So we can see here that, you know, price for the most part is just edging up, right, against the JPY. It's just looking for a higher high to retrace, get back a higher high. If I could just see what this retracement level was. Right, so a nice golden retracement there, and then price kept going back up to its business. And right now we are in the throes of a governing supply. All right, right now we're very close within the proximity of a governing supply. Because of that, I would really hate to catch myself buying right close to heaven and then just be sent back down, right? So this is actually a very serious issue for me that I'm extremely worried about, that we're already up here. That's why buy one worked, and I took profits, and I'm not yet entirely sure to buy at buy one again. I'd very much prefer not to and wait for buy two. Right, by buy one, we had this weekly supply, which is what's turning price down right now. Let's just go back to normal candlesticks so you can see it better. No one has complained about my speed, so I trust you guys are okay. I trust you guys are okay. Right, so we've got this bearish engulfing pattern, complicated 365 candles, a good drop, and then markets choppy all the way down, right? Price has finally returned, and now there's a negotiation. And I think buy one, honestly, is somewhere here, if I'm not mistaken. Yeah, I think it is. I think it is. Let's quickly open my live setup. What is this? This is CHFJPY. Now open FX. No, not FX, Saxo. I'm just trying to find the place where I wrote down the signal. Is there a problem? Okay, well, maybe it doesn't like that it's two charts on the same thing. Sorry, guys, I just want to quickly remind myself where buy one is, just to double confirm. All right, so this is FXCM. I don't know why I didn't want to show. Right, so this is where buy one is, right? So by the mark of 122438, 122438, 122438, 122438, 122438. My goodness, what's going on? Right, okay, cool. So 122438, right? So this is literally what we're looking for. 122438. Right, so there it is there, this demand here. All right, I just couldn't see it. I just couldn't see it. So let me just do this. Right, so this zone that I've just drawn right now is literally where buy one took place, right? Price came into the zone and then went up. And if you go back to the Mayorial time frame, we're talking about the zone at the bottom. Zero confluence, number one, right? Not much. There's just this is called not called, but I like to refer to it as a mirror reflection, right? So markets broke as supply return to retest the broken supply, which becomes a demand. There's always a little bit of money in that zone to push price up. That's why they call it a retest, right? A retest is a confirmation to keep going up, right? But it's not the best type of trades, right? A lot of people will be looking for a flip. There's something called a flip, as when a zone flips, when a resistance flips to being a support and vice versa. It's because of the little money that they put in there, right? And that resulted in that daily demand done ahead of time. You see, when they plug in, you see this here. Let's come on, man. This is good stuff. Let's slow down and teach. You see here, there's a supply first. Now, when markets arrive into the supply, before markets even allow a chance to react to the supply, they oppose the zone with a demand, and literally an opposing zone, bearish engulfing, bullish engulfing, which allows for a flip to happen. We're going to break this supply, come back and retest, take all the buy orders here. Half of the buy orders are used to take out the zone, the other half to maintain price going up. I've just dropped the secrets there. But long story short, markets coming back down to test a weekly demand. So price could continue to the upside. And I'm saying to you, I don't want any of that. I don't want to be involved. I'll rather buy somewhere down here. All right, on the daily time frame, that's what I'm calling my buy two, where price kind of like breaks through, you know, bearish structure, etc., etc. Something here like that is 10 times better than trying to catch another buy there. All right, so it's only one of those wait till we see type of situations. But for me, Swiss franc JPY, I'm doing nothing until price gets down here. Right now, a trader obviously who knows what they're doing would be looking for sell trades. And I hardly ever do that. Once I find a buy, I wait for it. I never try to maximize on the opposing direction. It's just not part of my trading style. But I know some people want to trade tomorrow. I need to get into the markets tomorrow. Well, then you need to be very smart about finding sell areas of value, right? You've got all the confirmations you need, right? You've got price systematically breaking nonstop demands, right? So when price keeps breaking demands, price is heading down south, right? There we go. So this was the last demand that price broke. It broke so that price could continue going deeper, right? So now we know that there's a broken demand there. We now know that the next demand is probably going to be here. So if I was a seller for Swiss franc JPY, if I was a seller for Swiss franc JPY, what would I do? What I would have entered last week, Thursday or Friday, on the 21st. That's the honest truth. We should have been in it last week, Friday. This past Friday. Friday, what? 24. I'm so confused. What's going on here? Okay, 21. So what's this? This is 21 Jan. Yeah, okay, so Friday. Oh, this is the 4-hour time frame. Sorry, I thought it was the daily time frame. Right, so we should have been in on Friday. Friday, 8 p.m., just before London session. Which we should have been holding that trade. By the way, AUD NZD from last week's war room has been triggered. I know because I told it to you. So my pending order is actually running. Got triggered on Thursday and Friday as well. So this should have been one of the trades we entered on Friday. I'm not in the sell, but this is the only safe place I can see for now where you should be waiting. Stop loss somewhere here, and you're just waiting to see if price is going to go your way. For a strong sell. Rejection has happened. We didn't get a bearish engulfing pattern, but nonetheless, markets are slowly dropping. Because you've missed this sell, you know, unless you're a cowboy trader, you could drop a sell stop order, which is generally not how I trade anymore. I like to get the best price using pending orders. But you can see here on the week, on the daily, there isn't a single demand stopping you, and markets are very much engaged with this pattern here. Right, so sellers, you're going to have to fine-tune this thing for yourselves. Maybe find some action on the 1-hour time frame, maybe. Right, prices already fallen quite deeply here, leaving the zone that I showed you on the H4 time frame. That's how perfect that zone was right now. Had we entered on Friday, had we looked at this thing a week earlier, right now as we speak, we should be at least be sitting at about 1:2 and hoping to hold up until this 1:3 here. Right, or somewhere there for a short-term swing. By Tuesday, would have closed in profits or held even further to the downside. Until then, for me, I don't even see a way out. Now, there is a possibility, right? Looking at this 1-hour time frame, like we did with AUDJPY, there is a slight possibility, very slight one, that given we just have a fresh touch, markets could, before meeting the target, come back deeper and then drop for a retest. So if you like risks, you could come back and set your pending order here like that and just wait to be triggered. You want to be triggered inside there. You don't want to start selling now. You want to be triggered as high as possible and as close as possible to your stop loss so that you don't lose too much money if this trade goes south. But this is a very possible trade that I'm considering including in the spreadsheet. You'll see my final decision tomorrow if I still want to. The only things I put in the spreadsheet are the things I'm going to actually trade myself personally, right? So I'm not yet sure about this, if I'll take it, but it is a potential trade to take for anyone else out there, right? Pound NZD is the next chart. Pound NZD. You should check out our podcast. Today's episode is out already on Spotify. I just haven't uploaded on the YouTube channel, but I lost my mind, man. We finished our first book in 10 days. I really want zero excuses. You can read a chapter a day. You can do 2 books in a beautiful month, man. It's been such a great journey, by the way. For those of you who are tuned into the podcast, I appreciate all of you. I hope it's changing your life. Tomorrow we start a new book, a very important, close book to my heart. Which really laid down the foundations of where I am today. After I got my thinking right, which is what we've been doing in the first book, where to get to the practicals, right? So there's Pound NZD. I won't lie, I hate this chart. I was moaning about this chart yesterday, actually, because this chart has got a lot of bull and bear traps. It's almost like it does not want to be correctly analyzed. And sometimes it's okay to let go of charts. It's okay to move on to the next thing. You don't need to force a trade. That's dangerous, right? So I've got a sell profile asset, which I understand. Then I look at the presidential chart, which I haven't done for most assets in a very long time. And in the presidential chart, I was surprised to find the same amount of, lack of clarity, man. Yes, it's a sell profile asset. Yes, it's going down, all that beautiful stuff. But what do we do now? Right, so the 3 months chart obviously holds each candlestick to one financial quarter, or one candlestick is worth 3 months. Guys, please don't forget, if you're enjoying this, hit the like button. If you're not, then, I understand. I'm not forcing you to hit the like, but I'd love to get some likes just to awaken my YouTube algorithm. I'd appreciate that. Right, but then we've got this annoying cluster here on the 3 months chart, and most of you would not have access to the 3 months chart. That's fine, but it just helps me know what the presidential chart looks like, and sometimes that's useful. And then I'm like, okay, fine. So this is quite a previously, sell zone for pound NZD. But when we start to extend to the left side, we get a better picture. So we now know that markets never do anything random, that markets are always moving in anticipation of where money was last left to move in accordance. Oh, sorry, let's go to the COT report for the first chart we did now, Swiss franc JPY, just so you see the stuff. So look at Swiss franc. You see that? Remember we just did Swiss franc JPY? Like right now, we just did Swiss franc JPY. On the podcast is fantastic. We got reading again. Fantastic. Thanks, man. Thank you for following the podcast as well. The podcast, the thesis behind the podcast is something well proven. You become what you think about most of the time. I got very good at this trading stuff because I was obsessed with it. I just became obsessed. I ate, slept, drank, traded, ran my life into a mess because of trading, and betted on trading to get me out of that mess, financial mess, right? And I really got obsessed about it. And so podcasts, me putting out more videos, is to get markets into your mind all the time. Think. My little boy is 7 years old. He's 7 years old. And every time we're in town and he wants a toy, he wants something that he sees as kids would do. He wants chips, he wants a chocolate. I never hesitate. I ask him 3 fundamental questions. What was the price of Bitcoin yesterday? Is to give me a rough estimate. What is EURUSD or USD exchange? At 7 years old, he'll tell you for quote unquote the exact exchange rate. Then I'll ask him the 3 principles of finance: save, invest, realistic. He knows that stuff at 7. What am I doing? I'm programming his mind. I'm programming his mind to become what he thinks about all the time. All right, it'd be nice if I can leave a big chunk of change and inheritance for him. It'll be 10 times better if he knows how to manage that inheritance to leave it for his children's children, right? And that's the goal of the podcast. How do you get to think about these things all the time, right? And it's not about trading only. It's about your standing point. But yeah, enough about that. Right, guys, so look at this. We were looking at Swiss franc. Look at the aggression until last week, Tuesday. Look at this. I mean, this has just been a clear, that's why I'm saying, you might do yourself a favor by finding a nice sell position, because they have finally arrived at that range where we want to operate on. But then looking at this, it makes me more itchy. It makes me want to take a trade now. But unfortunately, we've missed the main entry for this thing, like I said, was on Friday. Swiss franc JPY, right? It was on Friday. Go to the 1 hour time frame. Yeah, so this is what we just did this chart right now. So I'm saying you might want to wait for a retest here and pray that it comes, because really this thing wants to fall and has been falling, has been predicted by by the data. So if you start from the 4th of January 2022, you can see a beautiful drop. Try to save the drop continued. So 4th of Jan, if we go to our COT report, I'm just bringing this up so you know how to use this data, but it'll be covered in module 3 properly, holistically anyways, how to do it. Right, so in front of you should be my screen of the spreadsheet one more time. Right, so the 4th of January, there we go. So you can see now from the 4th of January, there was a slight reduction from 91% of their sell orders, all right, and then there was incredible momentum built up in the last 2 weeks to take it back to these 90s, where price is just been gradually falling, right? So it's going to take a while for them to go, and you can see even with the money on the table to buy this thing, fundamentally from the hedges, because you can see that the hedges are more long than short, but not dominatingly long. right? So you can see these orders, 6,000, 4,000, 5,000, 7,000, 2,000. So these buy orders are shrinking, right? So very soon we might actually see some serious action to the downside. So yeah, I'll set a pen in order here. I don't like it because I like being the first. I wish I had left with price here the first time price left there. I really wish I was part of that gang to leave here. Now price has already left without me, so now catching leftovers is not really my style. But we do have a rule for retests in the zones. I'm dropping down to the 30 minutes chart. It must smell like desperation. It smells like desperation, right? But yeah, something like this. I'd actually even tighten my entry. Right, so there's a good 4:1 if price does something like this. So let's say tomorrow, tomorrow is Monday when markets open, thin liquidity, and you know the Asian session, because it's whatever Asian London session eventually get naughty and push price back there, and then by Tuesday we're falling again. That would be great. That would be absolutely great if we get this trade play. All right, so I just remembered I didn't show you the COT report for Swiss franc, but yeah, everything is hinging onto the sell side. It's the big picture for me. If I want to buy, I don't want to buy anyway down here. Let it fall up until here, and then we buy again, right? We buy again. But for now, this thing is devastatingly falling, right? So buying anyway here or here or here would be a terrible, terrible idea, right? So after Swiss franc, I think we're negotiating with pound NZD, or have I lost my mind? I'm doing the wrong assets. Oh my goodness, we did this last week. I apologize. Ah man, right. So Euro AUD. Have we done Euro AUD? What's going on? You guys just enjoying me talk, right? Euro AUD is the next one. My partner is gonna kill me. I promised I'd be done by 5:30. Right, guys. So I'm gonna speed through this stuff now. Moving forward, I'm just gonna give signals. Basically, our job here is to just get signals. It's not to really host a class. I'm trying to find a clean chart without my notes so I can get a fresh perspective. Right, so we've got Euro AUD in front of us. Euro AUD in front of us. Euro AUD in front of us. Man, I got so sidetracked, right? Crazy. I was looking at last week's assets. But yeah, in it, maybe we gain something. So let me just write this down. I need to create a sell order for Swiss franc JPY for the spreadsheet. And pound NZD, I'm going to leave anyways because it's from last week. Let's keep to what we're doing today. Right, so governing tab, right? And this chart also going nowhere slowly, right? This is annoying for me, going nowhere slowly. Going nowhere slowly, right? What you want to do creates a stupid range. And then you have a stupid range, you have retail traders massacred. And you kind of like have to wait for that massacre until imbalance aside. Right now, we know Euro is weak in general. We also know AUD is weak in general. So, so when you put them together, you get a whole pile of nothingness until there's an imbalance on one of the two sides, right? So for the most part, the only place for real action is all the way down there, number one, right? I do see other levels, but I have no faith in them. In fact, I would argue that there will be a push to the downside. And when that push to the downside happens, we would also want to be in a seller's position. The problem is it's too close to a not yet broken governing demand, right? So as much as you can see that the demand is weak, you actually want it to break so you do not jump the gun, right? So this is what it looks like. There we go, governing demand preset. Markets have tapped it. Just to cancel out the noise, I want to quickly see this. Right, so we've got a couple of suppliers that are holding price up here, right, trying to push pressure. So then we've got a tennis match, right, where prices bounces from supply to demand, demand to supply. And that's why for 365 traders, markets are never random. We can clearly see what's going on because we are watching it happen every day with these orders, right? So markets need to fulfill a couple of levels, but at the same time, I'm starting to see a ladder. Sell pressure to the downside in line with the order flows, order blocks, and all that kind of stuff. Right, so markets arrived at a supply a couple of weeks back now, almost a month ago. All right, so this is probably sometime 6th of December, right? There we go. And then finally arrived at a weird demand. Do I want to trade this? Do I want to trade this? Yes or no? This is tapped now. Don't sell here. Don't do it. This is a bear trap. Don't sell here. It's too much. Retail traders have been here for too long. Markets are not really in the best of moods. Don't sell here. There's a strong bullish engulfment. Price might come back down to retest it in the next few days and then continue up. The bigger question I have is, do I want to sell up here? That's honestly the real question. The question is, there's only one true sell level for now, and it's not this one, it's here. And the answer to that question is just based on my rules. Yeah, this is quite deep. There's quite a deep cut into it. Yeah, okay, so Euro AUD might get no action from me. This is just how I am, guys. I'm sure there are many other traders who can find other risky entries and what positions and use 100 lot size and post on social media. I am not one of those. I really don't care for fancy things. I'm old school. I like my money clean. I like it slow. I like it when I can control it, and I can control it best when I'm following my own rules. And right now, you know, this is a PCP, so it's not good for the next touch, right? So if I am to sell Euro AUD, honestly speaking, I'll wait. I'll wait up until price got up there on the daily time frame. That's what it looks like. Bearish engulfing pattern all by herself, looking pretty, right? So this is it, and this is a waiting candle. This is literally no sex before marriage type of candlestick, because you're gonna have to wait for this one. You are gonna have to wait for this action, and it could take 2 weeks, could take a week, who knows? You know, it doesn't matter. But I would far much more rather sell here. Area of competition large there. Why? Well, this supply has already been engaged. You see that there? This bearish engulfing pattern has been engaged twice. So that tells me something according to my rules. I'm not playing at these small levels. I don't want to, you know, price could stop here. Please note, this is the other problem with this chart. Price could really do this and then stop there because it doesn't want to break, you know, higher highs, blah, blah, blah. But I'm looking more for a move like that for better confirmation. Sell high, you know, sell closer to a mayoral supply, sell closer to something that resembles. This is not even a bearish engulfing pattern, and it didn't even give us a strong imbalance. The one that gave us a strong imbalance is here, and it's active. So even this for me is quite a risky sell, right? So if I was to sell there, where would I exit? So that those of you who are not in the academy and won't have the spreadsheet can have some type of idea. It's hard to tell, to be honest with you. I would have to wait for the week to end, this coming week that we're entering, to see what order blocks are formed along the way up. But let's say for now, you know, you're looking at an almost 1:3 for now. If nothing happens here on the way up, no serious order blocks, no serious demands created, and we assume that this area here, the glass effect has happened, then sure, price could drop all the way down there, right? But for now, just to be safe, keep it here and let's watch this. But if I'm selling Euro AUD, it'll only be somewhere up there, only be somewhere up there. Next chart, EURCAD, and I apologize for looking at the wrong list. Right, EURCAD. Man, I'm still waiting for my sell. I am still waiting for my sell. I see they've broken up the gray area of value, which was, I wanted to see if there was going to be a demand play here. That's been removed. So I am still very committed to only selling here and waiting for the sell. I have no dreams of a very strong euro to a point where I want to break some rules. What I don't like about that sell is nice and high, but it doesn't have a lot of confluence, which worries me. I mean, there's a break of structure here. Fine, that's why it works. But also price could stop here. So while I'm waiting for that sell, I need to be mindful that price could just stop here. So I'm talking about price coming up and then turning there one day, right? And that's something I might have to face, right? But the reality is I'd very much prefer to sell here, and I'm not changing that plan as of yet. What I could do is figure out a couple of things. So for example, I could figure out my Fibonacci. I could figure out where the golden ratio is just to confirm my bias, swing high, swing low, right? So this swing high to this swing low, I'm fine. That's why I want to sell there, right? So that's my old analysis. It still stands. If I use the latest swing low, I'm still fine. This is the 50% mark for retail traders, which is also fine. You can try your luck there. It's already been tagged once for a fresh touch, so maybe a retest will occur and it will go deep, but there are just so many weird things on prices way down here, right? So many weird things, which is to say price could do this, and I don't want to be stuck in that. I want to watch the distribution. So price could come here only to bounce there, meaning you won't get your 1:3 and then come to me and then we go down, right? So I would far much more rather wait for price up there. I'm still committed to that. Until then, no trade, no play. I'm not wasting money in other experiments, right? So this is a nice 1:3. So EURCAD, it's clear as day. It's still our old signal. Pound USD, weirdo, this one. Weirdo. Doing well, moving well. Prices dropping like we anticipated the last time we spoke about this. What is new on this chart is I've marked this area here just so everyone is aware. This is a fib area, right? This is a good, strong place for this leg. I'm looking at the bullish leg, right? So if this bullish leg was to go up, this leg here, swing high, swing low, that price would look for a bounce there. I'm not looking at that leg because I want to buy, just to be very clear. Now, as much as I said earlier on, pound, AUD are all risky assets and they are following Euro USD. I want you to have a close look at the data. It's amazing that I know this stuff now by head. I know pound's data is weird. Look at this. So you'll see how aggressive, where's Euro? Look at how aggressive Euro is. In terms of sentiment. In terms of sentiment, it's been bloody red. And we know it from last year. It's been falling. USD has been falling. But in terms of trading for retail traders like you and I, they've been on us. See that? Creating consistent range in markets. That's why you go on social media, on Facebook, and you'll see on one traders group, people are trying to buy Euro USD. Come to 365, they are still selling. Next week, people are buying 365, still selling. And that's because a lot of people don't understand what's going on when the markets even out their orders like this, creating bouncy ranges. When you see stuff like this, golden multiple time frame analysis is your key. You stick to module 1 basics, because this and this will confuse you. The orders, 53% long, 46% short. Last week, 50%, 49, up and down. They are trying to keep this thing even kill. When you're trying to keep it even kill, you just want a continuation of the trend, nice and slowly. What Euro USD is waiting for is the drama that is in DXY, that is in the dollar right now. All right. So, and the reason why I'm bringing this up is when you look at the pound in comparison, you can see that there is a distinct difference, right? Pound orders earlier on were completely distinguishable. You could tell that their longs were very little and their shorts were high. But over the last 2 weeks, the shorts have started to slowly but surely lose momentum, almost a cooling of shorts right there. And now we've got into what Euro USD is doing. And in my next war room, maybe tomorrow, I'm going to teach you guys about the 13-week average, a thing that I do on the spreadsheet, just as a trick to realize I can predict when price is about to turn before it does, right? And it's based on the change of orders over a 13-week period. And I'll explain it properly. Because of time right now, we don't have a lot of that right now, right? But there are still more buy positions on the table, not that much. And they have kind of started to cool off their shorts, right? So now what does this mean on the chart, right? So we've got this short-term sell trade happening here, neither here nor there. And what I've done on the spreadsheet, sorry, I keep bouncing in and out of trades. I just want to show you that full transparency. And my thought process, there should be a pound. There we go, pound USD private plan, right? So I've got to sell, plan for this area, but it's not yet active. So I'm looking at pound USD and I'm looking to take a retest of the zone. I'm looking to take a retest here. So on Friday, unfortunately, I actually thought on Friday price would be bouncing and trying to make its way up. And it's not. And the reason it's not is because, look, man, at the end of the day, even though you are seeing order blocks, when you look at the actual average and stuff, this was a clean market imbalance, like just massive run to the upside. And so that's why I ended up investigating, looking for where would the retracement be, somewhere here. And if it's somewhere here for the buyers and they try and push price back up, could we maybe get a retest of the zone? Because look, at the end of the day, pound USD overall is still weak. Overall, right? Pound USD at the end of the day is still absolutely weak. If you look at your governing time frame, right, it's still following the exact same pattern of Euro USD. This is your governing supply that was engaged last year, like Euro USD. Price then created a PCP level like Euro USD, but USD used a bullish engulfing pattern, and that's why we still have more buy orders. You saw the sentiment, right? The sentiment indicator said, look, man, when it comes to pound, there are more buy orders on the table. Well, why? Because price arrived at a demand. It is leaving a demand as we speak. What is going on now? Just try to get back to the charts, man. Right, you guys can see my charts, I hope. Right, so this is what I'm talking about. So price arrived at a demand, a clean demand, and so obviously there are more buy orders. But now price has been slowly but surely pushing back to the original supply that fundamentally turned price around. Look at this week, look at this rejection, right? So price is slowly but surely going to start coming down. And my anticipation is that, you know, it would be nice to be part of those trades. That's really what I'm thinking about right now, that it would be very nice to be part of the downward trade. I'm using a Kinehashi candlesticks just to show you the reality of this asset, right? We dug deep into the first weekly demand, we moved for a retracement to the upside, we hit this weird downward thing, and now we're waiting to see if price is going to fall. So on the daily time frame, yes, we marked the sell area here, but we're going to need to wait for a retest because price has really left. You might be lucky if you're technically advantaged, you know, to find sells, right? To see prices breaking structure, making lower highs, etc., etc. But for the most part, I'm just going to wait for a perfect entry. All right, a perfect entry would really require for price to come back up a bit so that we can sell properly. A perfect entry would really require price to come back up a bit. And I am not talking about this one in front of you right now. This is good. But this is how every other retail trader would be thinking. And we know markets do not reward common thinking, right? Markets don't reward common thinking. We want something strong like that, you know, a very good impulsive move to the downside. So pound USD, I am waiting. I am absolutely waiting for a favorable sell position. And in my humble opinion, for me anyways, it would have to bring me back to this daily zone here. It would have to bring me back all the way up to this daily zone. And I'm hoping that will happen sooner rather than later, so I can ride this thing all the way down. Right, so that's pound USD. USDCAD, 6 p.m. Yes, you know, I make jokes all the time that my partner kicks me out of the house. She might actually kick me out today. Oh man, I had the best December. I mean, I know it's too late to talk about Decembers, but I really took a break. In 3 years, guys, like, I caught up with some of the shows you guys have been watching, listened to some albums, read books that are outside my reading list. So I have to read 3 specific books every day, a chapter a day of 3 books. Hence the podcast is just easy for me to do because I just choose one of those books. But I did other things, you know, I felt like a nice, normal human being, not this robotic, disciplined creature. But yeah, back to my routine now. Feels good to be alive. Thank God for 2022. Right, anyway, so here's USDCAD. And this is really based on dollar strength, which I'm sure you know dollar is strong, dollar will keep going up. Don't worry about the short-term retracement. There's inflation in the market. CPI data was scarier about a week ago. So that's why dollar is dancing about. But look at USDCAD, CAD, right? Let's go to DXY on my COT report. Just because the more you see it, right, the more you get used to it. I really think this spreadsheet is really, yeah, everything is up to date, man. I'm good. Right, so you can see with our banks, right, they've been very aggressive with the longs since last year, September. That's why we've been buying as accurately as we could, right? But on the table, we still have an aggressive net size. So no wonder why price tipped to the other side. This is normal, it's fine, right? So what we want to see over time, and where's CAD? Is an exchange of hands. You see CAD, they're just kind of like frozen in time. And CAD is like this because of oil. All right, we'll talk about fundamentals deeply one day. But for the most part, in the last week, CAD was still slightly strong than the dollar. Not than the dollar, than its usual self. Normally, CAD has more sales than buys, and this last week there were more longs than sales, right? So that's why we're getting an interesting read on the chart. And the reason for that, I'm assuming, is smart money is waiting for a better play on DXY. I would do that too. And this leg, I mean, what's going on here? Is this a retracement? Is price done? And by retracement, are we talking about a PCP retracement, like 23% or the 30-something%? Because you can see markets have just passed the 23% of the fib and moves that 38%. And so, you know, this could be interesting. It could be very interesting because it would flip the table on a lot of scripts in the markets right now. Right, so we've got a situation like this. Could this be it? Right, continue the downside, or is this going to be an actual full-blown recovery to the upside? I honestly am interested in finding out. But if you use normal candlesticks, you'll realize that it was not an easy battle to leave this demand. Right, so this demand was formed a long time ago. Price did a fresh touch and a retest, went deeper, coming from a very strong sell leg into Biden's demand, the DXY demand anyways, of November, December, the other year. Was it last year or the other year? I think it was the other year, if I'm not mistaken. I don't even remember anymore. Right, so probably the other year though. Right, so there's price now entering this area of value, bullish engulfing pattern, which looks to have done a retest, a bullish engulfing pattern, which looks to have done a retest. And on the left, we can see these supplies that are there, right, just to slow things down. And this was the same thing with the dollar index. The dollar index had to fight for where it is today. It was not a walkover for the DXY. In fact, there was a time where I was extremely bearish on the DXY. It made so much sense and I made a lot of money selling up until these governing supplies were engaged on the charts and they just took over. You'll forgive the notes. I'm just trying to make it as big as possible. So you see this area here, it's exactly, see, USDCAD looks exactly like this. Price got to this area, price fought against this area, price retraced because of that area, price broke that area. Look at where it is now. And people complain about the dollar, man, there's nothing to complain about. This is okay. We need to retest this bullish engulfing pattern. We're going back up again. Price literally stopped at the trend line plus also at that $95 psychological mark. Everything is fine. Just be patient, man. Yes, right. So USDCAD is following, in my humble opinion, a similar pattern. And when the dollar starts pumping, this thing is going to go back up. And when it goes back up, it's most likely, its next destination is to tag and bag this supply here, right? So on the weekly time frame, we can see much more clearly. Now, I like this chart because it's everything that comes back to it is significant market place. I would very much like the pullback to continue before it goes up, because I have pending orders in my ICM, in my IC markets account on this level here. FOMC pullback 16 June, the interest rate hike of last year created a massive imbalance on the H4 time frame, and on the USDCAD is just below. If this demand breaks, there's nothing to stop price from coming down here. So I was looking for a good play like this for my positional accounts. Because if price leaves here, I'm telling you, we're going all the way up. We're going all the way up with it for a very, very long time. Unfortunately, right now, it does not look like that's the case. Price is playing with the idea of turning around right now here, right? But only we need another 2 weeks and we'll know how the month of January is going to end. And if it ends quite deep into the zone and February opens it up, it means our second financial quarter from March onwards, we're looking at a very strong rebound. Remember, tapering should end in June. Don't forget this. So when tapering ends, immediately after that, we can expect an increase, interest rate increase, right? We should expect it. They can't do it at the same time, but after tapering, we can definitely expect that. So I would be looking out for that. Maybe price bounces up here to come back down. It's a long way to go. In terms of what to do in the immediate on USDCAD, I mean, we should have been in this buy, I guess. But I'm good. I enjoyed making money. I gave these signals on the private group on this particular sell. Short-term trades on this long didn't complete the leg. And I think I almost made the mistake of buying here at some point. I can't remember. But right now I am good. What I would look out for, what I would personally look out for, even though it's not really in line with the big picture, is how markets react to that daily supply. If markets react to that daily supply in a manner which indicates that price will be dropping, if you're watching your DXY and all those things, then you know, we can start to negotiate with these levels down there. Let me just use a Kinihashi candlesticks. Yeah, even that's not even the best idea in the world, right? But let's wait and see. Right, so we've got a swing high, swing low. And this is my last time running this. If it's not clear, we're going to ignore it. Yeah, so my instincts are telling me to ignore this zone and then wait here for a sell if you want to sell. That's what my instincts are saying. I say, look, man, ignore the bearish engulfing pattern you see on the daily, right? Something like that. And I don't even like that zone. I honestly don't even like it. Right, so USDCAD, I'm going to take a hard pass unless if we're taking this trade, unless if we're waiting for some action there. The price could turn lower, but I'd prefer to be safer up here. Right, so I'd wait somewhere here if I take the trade. But here I'm going to write if, so you'll know if my final assessment, or if you see USDCAD on the spreadsheet, then sure. I'll probably find a nice entry on H4, H1. For such a trade, I'd probably find a nice entry on H4, H1. Tomorrow is Monday, market starts. So Monday, Tuesday, we could really assess what's going to happen here. Because this looks like a very nice imbalance, man. I would really hate to leave this type of money on the table for a short-term trade. This looks like a very good short-term trade. I'm going to run another swing high, swing low with my Fibonacci. Okay. All right. Starting to get some interesting perspective, right? So bearish engulfing pattern, price comes in here to retest, price creates an order block on the 50% mark just above here. So maybe for a risky trade, one way you know you will probably most likely should enter with the acknowledgement that you will lose whatever it is you're risking. I'll do something like this. I would do something like that for USDCAD. You know, and guys, you know, I'll have to decide tomorrow if I'm taking the trade or not, and I'll put it up there. That's like 70 pips stop loss range, which is not bad. It's just that I'm very unclear right now if dollar is ready to pump yet. It looks like it is, but it's another thing when smart money decides to release reports way too late until it's happened already, right? And even the risk reward ratio, guys, is not healthy. The risk to reward ratio is not healthy unless if you are very tight and you do that. But making it tight means you also increase your chance of being stopped out. Then it's 1:5. If you just target that one zone, why I don't want to do that is because there was a module 1 imbalance there, right? So I would far much more rather ignore that second bearish engulfing pattern and then have my area of value like that. You see, that way, if we lose this trade, we're not losing 71 pips to the dollar. You know, it's actually smaller. It's risk friendly, right? So to speak, right? So let's go to the information tab. We were on 70 pips earlier on. Let's see what we're on now. So if I was to take a trade on USDCAD, it would be 40 pips, right? And 1:5, which means I probably stand to make about 40 pips times 5, whatever, 2, almost 166. Okay, no, actually I lie, almost 200, 182 pips to this demand down here, right? Bearing in mind there's one here, but it is some type of continuation pattern reacting to something on the left. So let's say by happen chance it's weak, price will drop there, but let's say it's strong, right? So I'll have my TP somewhere there just in case this one is strong and take that short-term sell. But it's a high risk trade. Remember, this is not the type of trading I find extremely attractive. Like, so this has to be guarded carefully. This area of value is actually smaller than I thought. It's about 30 something pips. So you get a healthy almost 1:5, right? So it's a potential sale, you know, to look into. Yeah, I would risk money, but knowing me, I'd be stubborn and just extend my TP. Right, okay, fine. I'm committing to USDCAD sale short term, but this is a high risk trade. If you've got a small account and you just want to avoid unnecessary high risk, let it go. Guys, time is not on my side, man. I just don't want to get kicked out of the house, you know. Crude oil. It's part of our list for today, part of our list. And we only got 2 more assets left, by the way. So thank you for those of you who are still around. I appreciate you. I absolutely appreciate you. Crude oil, you know, had a lot of fun with this until they stopped pumping it up. What's going on here? Let's get, isn't there a better chart? Crude. I don't want to look at Brent oil. We'll look at Brent oil another time. All right, let's see if we can size this thing up to the weekly, daily. This is not perfect, right? This is 2020, right? That negative drop. I'm just, there's a specific broker I like to use for oil, and that broker gives me good charts. I just don't know why I can't find that broker right now. All right, I give up. I'll have to work with what we get just for the sake of time. Right. So crude oil, we were really on our way to that $84 benchmark that Goldman Sachs gave us. Right. Also, bearing in mind the bigger picture was to at least arrive at $100. And then came last year, you know, December. The year did not end at 84, you know, but we were very close, about 75 bucks per barrel. And since then, in January, prices actually, you know, moved all the way up to about 84. So we finally arrived at the Goldman Sachs target, which is actually quite not bad. It's January now. They say December. So it's like a couple of weeks off, but bloody accurate, right? Smart money for the win, right? So now, what's going to happen here, right? So I don't know what happened to my notes in my old chart. I get very annoyed, but I am teaching my boy how to trade. So maybe sometimes he presses the wrong things, and I'm trying to teach him to use Owanda as his broker so that it doesn't interfere with my broker's stuff. But anyways, long story short, there's $100, right? So this is really where the oil tycoons want to be, and like price has really done a good job breaking supplies, going back up, etc., etc., etc. Been through this together many times. Now let's look at the COT data before we come up with some trade calls for oil. All right, so remind ourselves here, we don't care about neutral bias. We don't care when there's momentum. 60 to 69% is that momentum building. What we want to do is move when prices 70, 79, 80 to 100. And you can see that that momentum is back. It's back, baby. The buy-in, the longs are back. And the hedging will always be negative, or there'll be more negative orders, because remember, commercial companies that hedge against oil, like one of my clients also, is literally a producer of oil. So they have to hedge their positions against you know, market speculators to control price, like to keep that balance. But for the most part, we are pumping up. We are pumping up in oil, but up to where? You know, up to where is the question? Because the $100 was last year's target. Now we are now very much fixated on no man's land, right? We're looking for all-time highs by the end of the year, it seems, unless if something interesting happens in the world, like a war, or Putin changes his mind, or Biden and his energy crisis stuff intervenes, right? Oil is dead set, you know, ready to make a big supply touch. And by that supply, I'm speaking about $121 per barrel, right? And then watch the South African government in South Africa, a country that produces almost 60% of its own petrol at home, using international prices to charge for the cost of fuel, because it's a big tax mechanism, increase the price of fuel when really it shouldn't. A little government rent there, right? So if I look carefully here, you know, markets have broken this supply. It's a no-brainer. Markets are going to keep moving up. They've used PCP order blocks to do that as a continuation pattern here. Like if something was to go wrong in the world, right? Another oil crisis, which we know oil loves loves its crisis. Oil loves crisis, guys. Oil, you know, over time, if you're in the markets over time, you'll be like, yeah, you know. So if you look at this thing, this is called scenario analysis. I teach this in my module 3, right? You'll see here, there was almost a 60% drop, right? From that high to that high. Fine, cool. And when was that? That was a long time ago, 1996, all right? And then the next one was in the year 2000, and that drop was about 45%. So 40%, 45%, it's nothing for oil. Like, people complain about Bitcoin drop 50%. Yeah, many assets do the exact same thing. 73% drop in the 2008 crash, right? 2008 crash, oil dropped. Then came COVID. So oil is a risk sensitive asset. When COVID came, people can't travel, oil also shut down. In 2016, from March of 2014 to 2016, oil fell again 74%, 73, 74. And then came COVID. It went all the way down to -0. So practically, you know, almost 100%, right? Basically 100%. And now it's done a V-shaped recovery to where it used to be. That's important because marketers' memory not because we remember things, but because we leave orders, we leave money where last we spent it. So if I come up here, 2020, right? This is that COVID slump. You'll see that all the sell orders in this supply were spent because we pushed price all the way down to the negative. That's why price didn't even react. There was nothing to react to. But there are other psychological areas like this clean imbalance here that oil could become. And that's where I think the next target is, which is why I've been beaming oil for $100 US. When that happens, we're going to need to have an interesting conversation. In my humble opinion, I don't know if there's anything to do in oil. Let's go to the lower time frame. So weekly is doing whatever weekly does. You can see the pattern, guys. It's there. Pump, retracement, pump, retracement, pump into a retracement, pump into a retracement, right? And has there been like that? Pump, retracement, pump into a retracement, pump into a retracement. It happens, pump, big retracement into an order block retracement, and so the game goes, right? So if we look at this little cluster here, where price banged 3 times or 4 times, right, we can see that oil has a tenacity to maintain and hold while it is shifting the supply of stuff. And we've got this situation somewhere here. Now, if price is to reach that $100 US target, I would then look to sell. I would be looking to sell from here to all the way to about 72 US per barrel. That's a long, we can come back to this signal later on, 2 weeks from now, when there's more clarity and more data, right? But right now, if the question was asked, what should I do in oil on the daily time frame, you know, you're too close to the supply and too far away from a demand. That's the honest truth. You are too close to a supply and too far away from a buy low opportunity. So if you're not a cowboy trader, he's late for dinner. Yeah, what did I forget to share? Yo, I forgot to share something. Yeah, and I am late for dinner, bro. I'm in trouble. Please tell me what I forgot to share. Yeah, if you wanted to buy, you'd want a play like this in oil. You'd wait for this drop. It's 23 past 6. She's gonna kill me, man. She's gonna kill me. I'm gonna have to kneel. Yeah, something like that. I mean, it's not the most exciting trade in the world, right? It's really not the most convincing, but it is got a golden ratio backup. So I already buy there, and let's see in terms of confluence. Yeah, man, I don't know. I was so big on oil last year. This year, I just want to wait because price could really mess you up and come for a better lower buy here. Price could really mess you up. Oil chart. I'm not sharing the oil chart. Oh my goodness, oh, sorry. I'm late for, oh, that's why you guys are saying I forgot to share. Sorry, man, sorry, oil chart. Thank you. It's very important I keep track of this Zoom YouTube chat. Right, there we go. I apologize. Right, so there's the oil chat here. Right, but anyway, there isn't anything to do, right? Because you have to wait down here for weekly confluence. But there is a risk worth taking buying there. There is a risk worth taking buying there. There is a risk worth taking buying there. I can't believe I left you guys on that COT data, right? But yeah, for now, nothing, right? See, oil has done an all-time high. Just think about your assets. Every time Bitcoin does an all-time high, it has to drop, it has to crash. And so we will see a crash. So I would, yeah, if you're high risk, find a sell, but I highly advise against that. I would wait for a buy here. First high risk buy, so risk very little, and then main buy down there. But oil could retrace here to the $100 US mark, right? So this would be a good buy for me, and then I would love to sell definitely from $100, maybe all the way down to that 71, $70 US mark that we saw on the weekly time frame. So I'd love to sell all the way up to somewhere here. Right, so this is my play for oil for now. Do nothing until price gets to this area of value, and if it does, then take the trade up and then go down. Right. Thank you, guys. Thank you. China 50. I promised someone I'd look at China 50. Got to keep a promise, man. Where are all my charts? Where is the Wonder chart? What is going on with my trading today? CN15 is another way to find it. Capital.com. No, man, I have notes. There we go. There we go. It's my first time in 2020 looking at China 50. 2022, sorry. After the Evergrande crisis, I pulled out of China 50 for the most part. From a corporate perspective, we don't really invest that heavily into China stocks, Chinese assets, so we're not even that affected. But it just reminded me why I would prefer to stay away from communist-run countries, right? But China 50, is it a free fall? I mean, you'll be shocked. Things like Alibaba. Have not yet recovered. Right, see this? Marked this a long time ago. I told you that price was coming down there, the stock here. I did an Evergrande crisis video a long time ago, and I said this thing was going to fall 70%. The stock was going to fall 70%. So my first time buying Alibaba stock will happen when I get a trade alert that price has finally arrived here, taking out this clean. It wasn't even a real demand, right? So price has broken through psychologically. So I think Alibaba stock will come all the way down there, right? And that's a beautiful discount. I mean, the business is sound, so it's a great company. But because of stuff like this, I'm not yet convinced it's time to start buying into China 50. But yeah, Alibaba stock, for those interested, it's a good thing to trade or buy or own, whatever, if you know where to buy or own these things, right? So CN 50, China 50. On the governing time frame, let me just remove all my notes, give it a fresh perspective. Even though I'm in a rush, let me not rob you guys. Just give it a fresh perspective. I trust I'm showing the charts right now. Right, there we go. There we go. Right, and remember, this is the first time in a long time I believe that a demand was broken. But it's actually interesting because if we used the Kinahashi candles, would have known that this demand was not solid. Isn't that interesting that I did not think about that? You know, there's nothing ever there. So the falling is still going to happen personally. You know, there are only like less than 2,800 and something billionaires, and the majority of those billionaires in the world are actually in China, and a fifth of the majority of billionaires in China in parliament. So this is very methodological what they're doing. So I see more downside in China 50. It's not really an asset I want to buy into. Removing weekly supplies, blah, 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 blah. If you're a trader, you're good with selling indices, I'd be looking more to sell. You know, it's just about catching the right wave. Otherwise, if you're not into selling indices like me, it's just a personal choice, then I'm waiting for a beautiful buy, right? But I do see something here. I would assume this was an attempt to pull these sell orders there. If you draw the whole complicated 365 pattern, and then the bearish engulfing happens. So drop, base drop, right? Typical supply prices aching up there. And if we use our volume-based candlesticks, we get a very clear picture of what it is I'm talking about. We have a situation that looks almost like that. So I would wait. I would wait to get tagged here for a round 2. Swing high, swing low, Fibonacci to confirm bearish bias. Right, so 50% level, nothing really within the golden ratio that we like to use. So yeah, it's a high risk sale, but for the most part, in terms of what I would do personally, I'm doing nothing in China 50, not that interested up until price is ready to buy up, because I would love to buy the whole leg down. So I have to wait to see how far that leg drops, right? And the last trade chart for the day that was planned is Palladium. Did you guys see one more time? Because I know some of you didn't. I mean, I've been trying to catch up with the charts when I was on holiday. But did you guys see that platinum came back for us? I just saw because I got triggered. All right, some of you guys were waiting for a trigger. All right, all these lines, price went below. Let's find out what happened. Some of you guys were waiting for a trigger in platinum, and platinum did come back in December while you're on holiday. And people wonder why I like to set and forget. Set and forget is predominantly the best way to read. Palladium is a powerful asset. It pays extremely well and really relies on further gold in its pumps, right? So we've got finally a downward shift in momentum. Finally, right? And it's already tagged this area, which is unfortunate. A part of me was hoping it would break this area. It did not. A part of me was hoping it would break this area. It did not. And it looks like it's already on its way up, which is very unfortunate because I wanted to buy somewhere down here. But it looks like price has already decided. I was quite strict, so I waited there. I will keep my pending order down there in case price is just reacting to this weird demand here and it will still come down. I don't know, right? But Palladium pays. So that's why I want us to keep a good. My first trading portfolio when I was looking for corporate clients to trade money for, 60% of my wins came from Palladium. Beautiful asset. When it's very bullish, it's so bullish. But when it's bearish, it's angry and it uses big red candles to take you out. So just be very careful. Right. I'd love to buy down here, if I'm being honest. But that's just basically off sentiment that this thing is frictionally bound to go to the upside and occasionally retrace violently. Let's check out Palladium. There's Palladium. My goodness, the spreadsheet is really up to date, guys. I'm working overtime for you. This is good. I keep thinking there's a lot of work to do. Looks almost done, right? So they've started to increase their sell positions, and we obviously saw that for ourselves in the chart where price is actually aching down, right? We saw that for ourselves. And you know, the orders on the table for strong buys are there, but they're not that, you know, big a deal. But for the most part right now, I would wait for this to be done for those of us who want to buy platinum. Okay, and you see I need to finish this, catch up with platinum, but it's the last chart. It's the last chart here, right? So Palladium is frequency in some type of a sell momentum, which I think I should just chill. I would do nothing on the governing time frame, wait for a real drop into my area of value. Those of you who are cowboys, hee-haw. No, don't. No hee-haw. Do not hee-haw there. If the price was to push really all the way up, this would be very interesting. I would be in the sale. The price will come all the way up here, sell. But right now, I'm assuming price might actually getting ready to change direction. Right now, I think price has arrived at this retracement, so I'm going to buy down there Palladium. Right, ladies and gentlemen, I appreciate all of you. I need to go freaking buy roses or something. But this has been fun. It's good to be back. I apologize for the previous confusion with the wrong link and all that kind of stuff. I will learn how to share my screen on YouTube Live. I'm looking forward to this week. So on the spreadsheet, just so we're clear, you're going to get Wednesday's war room that I shared with you. I did a war room on Wednesday or Tuesday. the pending order list and today's final pending order list, and then everything will be up by 4 p.m. or latest 4 p.m. But I'm hoping by 1 o'clock I'll be done. But again, you'll get an official email from me when I'm done. As you can see for yourself, the spreadsheet is ready. I appreciate all of you. Shake my hand. I hope you all have a fantastic day, a beautiful Sunday, and that you trade well, use your stop loss, all that cool stuff, and really start to manage your positions holistically. Don't forget your trading plan. Here's mine. We'll get a copy of it tomorrow, etc., etc., and then just start to think about it. Fantastic, Titus. I appreciate you. Yeah, I think that's it from me, guys. I will see you guys soon this week. Yep. Cheers. Cheers, everybody. 365. Shake my hand.